Hey, this is Troy Stavros with Doorbell Real Estate, and it is that time for us to go over the monthly market report and see how things have fared through the end of January, our first month of the year, compare it to what January this year looked like to January last year, and also kind of look at the trends of what has been happening month to month in the real estate market here in East Tennessee. Let's jump in and get started. Okay, this first slide is showing us what has been happening in the entire East Tennessee market. And this is obviously comparing January of 2023 to January of 2022. Home sales are down 28.2%. Pending sales are down 4.8%, so that's not too bad. Inventory of homes is up 61.5% compared to last January. New listings are up 0.1%, so it's basically the same as it was last January. The median sales price is up 5% in all of East Tennessee compared to a year ago, and is coming in at $315,000. Last month we came in at $318,465, so it has come down a little bit. But I think we see that number fluctuate a little bit. But still, it is obviously showing that the market and pricing is moderating. It's not falling off a cliff like it might be doing in other parts of the country, but it is just basically moderating. A 5% increase year over year is pretty normal. But we'll see as we look at some of the other areas and pinpoint in on specific areas. We're seeing larger increases in that even when we go county to county. The absorption rate, which is the amount of inventory on the market on a monthly basis, is down from last month. We were just over 2 months at 2.08 months worth of inventory in East Tennessee, and that has actually fallen to 1.87 months. So inventory actually dropping a little bit, yet you can see compared to a year ago, up 61.5%. So if you look at this slide as a whole of East Tennessee, what that is telling you for buyers is that home sales are down, but the amount of homes available are up, and pending sales are down. So it's a good opportunity for buyers to go out and find something because there's just that much more inventory on the market than there was a year ago when they were having trouble finding anything. And when they did, they were having to compete for it. So let's kind of dive in to the numbers here a little closer and look at these graphs. So these graphs here show that the number of listings has been increasing, and then the sold listings has been decreasing. And as we look at the months of December and January, I mean, we have seen the number of listings increase through June, July, keep increasing steadily till it got to about November, and then the amount of inventory started reducing. Now, this is typical for this part of the year. You know, before, when we were dealing with the crazy markets of 2020 and 2021, we didn't see that effect that the winter months have on inventory and on the real estate market. But now that things are normalizing, we're starting to see that again. So what typically happens in the winter is we see inventory fall and then start to pick up and increase as we get into the spring months. And that's basically what it is showing us here in this number of listings slide. We're seeing the number of listings decrease from November, December, January. We'll probably expect them to continue to decrease, and then they'll start trending back upward as we get into spring. As we look at the sold median list price, you can see that number has just been kind of bouncing around. It is bouncing around from March, May, June, July, August, kind of trending down, came back up a little bit in December, and then started working its way back down a little bit in January. And you can see that the median list price has been considerably higher. But when we look at the brown graph on the listing prices, The brown line there shows the new median list price. That is trending closer to what the sold median list price is, which is good news also for buyers, meaning that the prices of new listings are coming on at a level that is more equal to what homes are selling for. So the prices are coming down. You have a bit of an opportunity to get into a house that is less than it would be if it was a couple months ago. So that is good news for buyers. Absorption rate, if we look at that line, you can see that trend up and also start coming down equal with the number of listings because, like we said, inventory will decrease over the winter months. If we look at the days on the market on the bottom left there, you can see that that number has been trending up ever since July. And it just keeps rising. And the average days on the market now for East Tennessee is over 40 days, where, a year ago, we were lucky to see things stay on the market for a couple days. So definitely seeing the market shift. Definitely still a seller's market, though, because of the amount of inventory is still super low, but there are opportunities for buyers just because there's more inventory on the market than there was a year ago. The sold to list price ratio shows that there is negotiation happening. When you look at that graph, which is on the right there, second down, you can see that earlier in the year, you had to pay above list price in East Tennessee for a home, but now more negotiation is happening. But be aware that for homes that are still sought after in very sought after areas and priced correctly, you still may run into competition. So don't rule that out. Okay, let's take a look at Knoxville. So the Knoxville, Tennessee market, that's everything with a Knoxville, Tennessee address. January of 2023, home sales were down 31.8%. Pending sales were down 5.9% compared to a year ago. The inventory of homes was up 51.1% compared to a year ago. New listings are down 1.2%. The median sales price was up 9.32% compared to January of last year and came in at $340,000 as the median sales price. Last month, it came in at $330,000, so this number is still trending up. So again, if you're saying, well, I'm just going to wait for prices to come down, that's not the direction they're going, at least not in Knoxville. The absorption rate is down, meaning that inventory is trending down. Last month, it was 1.21 months worth of inventory, and this month it's 1.10 months. So heading in downward for the same reasons that we talked about earlier, because the winter months, you see inventory trend down, and then they will come back up in the spring. So let's jump over and take a look at the graphs for Knoxville. Okay, here's the Knoxville single-family homes. The number of listings, you can see again, just same as the East Tennessee slide, trending downward from November, December, January, because of the winter months. Like we said, we can expect that. That's normal. And then it'll start hopefully picking back up in the spring. Now, one of the reasons that we're seeing inventory stay so low that we've talked about in past videos is interest rates still being high. Sellers have locked in interest rates over the last couple of years that are significantly lower, maybe in the 3% range, and they don't want to give up that low interest rate, so they're just not putting their homes on the market right now. So our hope is that as things progress throughout the year, maybe interest rates will come back down into the fives and give sellers a little bit more motivation to put their homes on the market. As we look at the absorption rate, again, that is following along with the same line as the number of listings coming down because of the winter months. Days on the market in Knoxville has also continued to increase through July. It started moving up and has continued upward and has now jumped over 30 days on the market on average for homes in Knoxville. The listing prices have still, you can see they've been trending upward, that top right graph. trending upward since November. They haven't really gone down. When you look at the active median list price, the list prices have basically continued to trend upward slowly and continuing to move upward. So again, if you're waiting for home prices to go down in Knoxville, that just might not happen. So now is a good opportunity to get out there when there's more inventory on the market. Secure a home now at the current prices before they continue to rise. And then for some reason, if you lock in an interest rate now and then interest rates go down, you can always refinance your loan. As we look at the sold to list price ratio, that shows us that negotiation has been happening. Again, earlier in the year, it wasn't. You were paying above list price. But as you go down into the areas now in November, December, January, you are seeing definitely more negotiation happening. Okay, let's jump to the next slide here. So Farragut. Farragut we've talked about before, because there's so few homes that give us the ability to pull from as far as data. These numbers can fluctuate wildly month to month, but let's take a look and see what they say. Home sales are down compared to last January, 27% in Farragut. The inventory of homes is up 107.1% in Farragut. So significantly more homes on the market this month, this January, than there were last January. New listings are up 20.7% in Farragut. Pending sales are up 14.7%. So we're seeing more homes on the market and more new listings, and we're seeing more homes go under contract this January compared to last January. The median sales price is down 10.34% compared to last January. It's coming in at $545,000. But that's up from last month. That was $520,000. And that depends. And I'm going to show you some of the reasons why that is in a moment here when we look at the graph, because it's pretty easy to explain why this varies so wildly in Farragut. But the absorption rate inventory, again, trending down, the amount of inventory trending down because of the winter months. Last month it was 1.47. This month it is 1.31. Let's jump over and take a look at the Farragut data. So for January of 2023, we're going to jump in and take a look here. Okay, so you can see number of listings is really kind of jumping all over the place. That's the top left slide here. Listing prices also kind of all over the place, and prices still kind of trending up, but the new listings are definitely following the pricing of the closed listings. Absorption rate was trending up, and then obviously, like we said, coming down for the winter months. Hopefully we'll see more inventory come on the market in the spring. When we look at the sold to list ratio, it has been trending down since April and is coming in. We're seeing a little bit more negotiation happening in Farragut, even with the little amount of inventory that we have. Days on the market has been trending up also since May, June, July, and is now coming in above 30 days on the market. But as far as why the number, as far as the median sales price fluctuates so much, when we look down here at the sold listings and we compare it to last year, you may get a big sale that definitely changes the median list price. So like here we've got two sales between $1 million and $1.1 million. One sale between $1 million, $1.1 million, and we compare that to last year. That's pretty much the same. But then here we had a bunch of additional sales in those higher price ranges that really changed that number. And when we compare it to a year ago, so we had another sale between $900 and $950, another between $850 and $900. We had another between $750 and $799. There were 6 sales last year between $700 and $750 in the month of January, when there was only one sale this past January, last month, between 700 and 700 and 750,000. So that makes the difference when you look at why is the price down, the median sales price down this January compared to last January. That's why there were just so many more sales. I mean, 5 more sales just in the 700 to 750,000 price range. So that's the reason why that number varies so wildly in Farragut, because there's few sales to choose from, and when there's a big discrepancy like that year over year, it can make a big difference. Okay, let's look at Lenoir City. Home sales are up in Lenoir City by 3%. Inventory of homes is up 75.8%. New listings are up 34.9%. Pending sales are down 2.3%. The median sales price is down 21.68% compared to last January. And the reason for that is the same reason that we just talked about for Farragut. There aren't a big pool of sales to pull from. So if there's a big sale that happens in the one year compared to the other, or a bunch of sales in a higher price point, then that's going to really make a difference in what the median sales price comes in at when you don't have a lot of home sales to choose from. Median sales price came in at $300,708 compared to last month, which was $385. Again, the same reason that varies so wildly is what we just talked about. Last month, there were probably some bigger dollar sales, so it really affected that median sales price. Absorption rate is going down. Again, same reason we talked about before, the winter months. Last month, we were at 1.4%. This month, we are at 1.26%. Let's take a look at some of the graphs for Lenoir City. Let's change over to Lenoir City here. Let's see, Lenoir City, January of 2023. And you can see, because there aren't a lot of listings, we're only dealing with about 60 listings, maybe up to 80 depending, but you can see how it varies. Active listings here, I mean, last year we were down to only 30 listings in Lenoir City, and then it started trending up, kept trending up. In November, it peaked at about 82, and then since then it's come down to about 58. So definitely all over the place, which will affect numbers in a big way if there's higher dollar sales. As far as the list price, you can see they're all kind of holding steady kind of around the median sales price, but you can see here the sold median sales price last month was $385, like we talked about on the previous slide, and then this month it came down to $308. And the reason for that, if we go down to the sold listings, is let's take a look and see what happened. Okay, well, you had one big sale this month between 1.9 and 2 million. You had a couple between 1.3 and 1.4. But then you had some additional sales here between 1.2, 1.3. That one, those canceled out. This one, you had another one between 1 million and 1.1. You had some up here. These canceled each other out. But then you had a bunch more in this price range, in that whole 350 to 400, 400 to 450, and the 450 to 500 range, which definitely would skew the number higher last year compared to this year. As far as some of the other graphs up here, the days on the market, while they jumped up to 38 days in October, has worked its way back down. In this past month, the average days on the market was 23.4. And as far as negotiation is going, earlier in the year, like we said on the other slides, in the other parts of town, couldn't get anything under list price. You're paying over list price, but now things are working their way down, but actually starting to trend back up towards pretty close to having to buy pretty close to list price. So that's what's happening in Lenoir City. All right, let's take a look at the East Tennessee counties, the surrounding counties, and what is happening county to county from January of this year compared to January of last year. All right, so Roane County, available inventory is up 10.8%. Pending sales are down 4.3%. And the median sales price is up 14.87% and coming in at $274,250. That's in Roane County. Let's go over here and take a look at the Roane County slide and see if there's anything that's jumping out at us as far as these slides. Again, the number of listings has really been increasing, and when there's a big gap here between active listings and sold listings, that means there might be some opportunity for buyers to be able to get something under contract and maybe work a deal on something. But you can see, again, starting in November, inventory just falling off a cliff like we know it does in the winter months. As far as the absorption rate, that follows right along. You can see this line here basically correlates with the number of listing line. That's just telling you what's happening with inventory. Went up and now is working its way back down. As far as days on the market in Roane County, right now, this past month, they were coming in averaging about 35 days on the market. That's an increase over the last 3 months. And, you know, the same thing can hold true with the winter months. You see days on the market go up because there's typically less buyers and inventory coming down. List prices as far as median sale price and new sale price, they're all kind of following in line with each other here. And as far as negotiation happening in Roane County, again, you saw what happened earlier in the year here, and then it has started to come down, so a little bit more ability to get a house under contract with a deal in Roane County right now. Oh, sorry about that. Let's go back this way. Knox County. What's happening in Knox County? Available inventory is up 55.6%. Pending sales are down 2.8%. And the median sales price in Knox County is up 8.55% and coming in at $336,500. Let's take a look at the graphs for Knox County and see what is happening. So Knox County, again, inventory, doing the same thing that we've talked about. List prices, because inventory is decreasing and is really just above a month's worth of inventory, which is significantly low, that is allowing the list prices up here in this top right graph. You see they just keep increasing. While they leveled off a little bit here between July and October. So July they were 390, then 396, 399, 403. They came down a hair to 399.9, but then over the last couple months, list prices are continuing to rise. So again, if you're waiting for home prices to go down, it doesn't appear to be happening, at least not in Knox County. Again, absorption rate is following this number of listings coming down because of the winter. Although, again, it's pretty normal. We're seeing this basically on all the slides, how earlier in the year, February, March, April, May, we were up above 100% sold to list price ratio. Things were selling above list price. But since then, we've seen that fall and more deals happening below list price. In Knox County, average days on the market has been increasing since May, up, and then this past January, landing at about 34 days on the market. Okay, Anderson County. Available inventory is up 25.3%. Pending sales are down 6%. And the median sales price is coming in, is actually down 5.96% for January compared to a January earlier, and the median list price coming in at $235,000 in Anderson County. Let's take a look at the Anderson County graph, see if there's anything there that's jumping out at us. Let's see. Okay, we're going to need to put Anderson County in here as a new location. January of 2023. Let's take a look. Okay, so same story with number of listings. As far as absorption rate, we're saying the same thing. Just over a month's worth of inventory in Anderson County. So inventory is very, very limited. Just not many homes for sale in Anderson County right now. Days on the market has increased this past January up to 27.4 days on the market. We're seeing active median list price, median sale price, and the new median list price all kind of following along with each other. So things are staying pretty consistent here in Anderson County. Again, same story as far as the sold to list ratio, up above list price back in April, May, June, and then started falling. Definitely more negotiation happening now. And basically that's just, we've talked about this in other videos. It's basically supply and demand. When you have less buyers and inventory is increasing, you will see more negotiation happening, and you will see more opportunity for buyers. And that's what we're seeing. Every one of these slides that we've seen so far, inventory has been up compared to a year ago. So you're going to see more negotiation and better opportunity for buyers when that happens. Okay, Loudon County. Available inventory in Loudon County is up 140.5%. So quite a bit more inventory available in Loudon County. Pending sales are up 7.2%. And the median sales price is up 15.63% compared to last January, and is coming in at $455,000. So all arrows are pointing up in Loudon County. But something that's important to note, let's look at the graph for Loudon County. January of 2023. Okay, so obviously seeing the same thing happen as far as inventory over the last 3 months. Wintertime, inventory starts falling. Same as absorption rate. There they have just under 2 months worth of inventory. And the sale to list price ratio has definitely fallen as well, like the other graphs that we've seen, up above March, April, May, up above 100%. So having to pay above list price, and that has fallen and now is hovering kind of around that 97% range. So definitely negotiation happening. And one of the reasons that we're seeing that, also days on the market has increased. Last month it was up over 50 days on the market, and then January came down to about 35 days on the market. But here's something interesting about Loudon County, and we've talked about this before if you've seen past videos, is the numbers for Loudon County are skewed significantly because Tellico Village is in Loudon County. So what is happening in Tellico Village is going to drive the numbers mostly for Loudon County. So if you took Tellico Village out of the picture and you looked at the stats, the median sales price would not be anywhere near $455,000, but it's because of the price of homes in Tellico Village that is really driving that number up. But here's something interesting when you look at what's happening in Loudon County, especially when you look at active listings. So you can see there's some decent sales here, but when we look at active listings and compare it to a year ago, Look at this price range right here is basically what is happening in Tellico Village. Last year, as far as active listings, there were 4 listings for sale between 400 and 450. Now there's 13 available right now. Last year, there were 5 listings between 450 and 500. Now there's 18 available right now, active on the market. Last year, there were 4 between 500 and 550. Now there are 21 available homes in that price range, active on the market, ready for someone to buy. Last year, there were 10 between 550 and 600. Now there's 22 available. Last year, there were 4 available between 600 and 650. Now there are 11 available. So all those homes are available right now in those price ranges. There were 3 between 650 and 700. Now there's 9. That is a lot of homes available, the majority of those all being in Tellico Village. So that tells you that if you were looking to be in that price range and you wanted to be in Tellico Village, right now might be a good time to be buying something and getting a deal in there, because the majority of these homes are new construction. So builders had a windfall over the last couple of years in Tellico Village, built like crazy, but now it's looking like maybe they built a little too much, and there's a lot of homes available sitting on the market right now waiting to be purchased, and probably quite a few builders that would love to get rid of something. So that could be an opportunity for a buyer that is looking to be in that price range in Tellico Village. Okay, Sevier County inventory is up 155.5%. That's quite a bit. Pending sales are down significantly compared to a year ago. 41.8% pending sales are down in Sevier County, and the median sales price is basically about where it was last year, 0.48% down, coming in at $525,000. Let's take a look at the graphs for Sevier County. And I'm sure we're going to see basically the same thing. Again, number of listings trending down, although they started a little bit earlier. They kind of hit their peak in August and then started trending down since then, along with the winter months. That absorption rate follows that. Absorption rate in Sevier County is almost at 3 months, so that is significantly higher than we're seeing in a lot of the other counties. So there's more inventory available there. As far as the active median list price, it's kind of has gone up went up in February, went up in March, and then has kind of held steady up and down a little bit, and really hasn't moved much over that point in time, and not really wavered much. But you can see that the sold list prices have jumped around. And another reason for that is, like we talked about earlier, you can have some high dollar sales in Sevier County on these big investment properties, these big Airbnb and VRBO and whatever, these rentals that are cabins that are selling in the millions. They can make a big difference when it comes to a median list price, because if you get a couple of those, it can definitely sway the numbers. When we look at the sold to list ratio, in February, March, April, you're basically paying what people were asking, but it's again slowly started trending down since then, where more negotiation is happening in Sevier County. As far as days on the market, last year you were at about 24 days on the market, and that again has trended up. This past January, last month, up over 63 days on the market for your average listing. All right, the last county that we're going to look at is Blount County. Available inventory is up 45.9%. Pending sales are down 5.8%. And the median sales price is up 9.40% and coming in at $352,000. We'll take a quick look at the graph for Blount County, and I'm sure it's going to look similar to what we've seen on the others. They all are kind of trending the same way. Number of listings went up, leveled off, and then came down over the last couple months. Again, that's a seasonal thing. We can expect that to happen. That's not surprising. But what we'll expect to happen is for more listings and that number and that graph line to trend back up as we get closer to spring and more people put their homes on the market. Absorption rate in Blount County is at about 1 month, 0.28, so it has been trending down just a little over a month. Still pretty much across the board, except for maybe like we saw in Sevier County, very, very little inventory of homes available out there on the market right now, but more than there were a year ago. So that's a little bit of a bright spot for buyers. The sold to list ratio, again, same story. Earlier in the year, up above 100%, and now more negotiation happening. And as far as days on the market in Blount County, last month we were at 37.4 is the average amount of days on the market. That's meaning how many days it takes for a home to go under contract. Just one more thing to look at here is when we look at all the counties, depending on what kind of price you're trying to be in, as far as average prices, the median sales price goes, you can see Anderson County is coming in as right now the most affordable, followed by Roane County. And then you've got Knox County and Blount County are kind of neck and neck right around that mid 300,000s range. Loudon County, we said, again, that is being skewed by Tellico Village. You can find deals in those lower price points outside of Tellico Village in Loudon County. So don't rule that out. Sevier County, that number is always going to skew high because of the large amount of investment property that's being sold in Sevier County in the Gatlinburg, Pigeon Forge area. That will always skew that number high, but that's not to say that you can't find some lower priced homes in Sevier County as well. Okay, there's a lot of information. We saw a lot of the same things trending in the different counties, in the different areas. Again, the big takeaway there, inventory is still significantly low. It's trending lower and will probably continue to trend lower because of the winter months, but we expect it to kind of go the other direction when we hit spring. One of the reasons that it might still stay low and is continuing to stay low like it is because of interest rates. We'll talk some more about that here in a minute. But, like we said, sellers are have interest rates now that they have locked in on their homes that they're living in, probably in the 3% range if they refinanced or bought their home over the last couple of years when interest rates were significantly lower. They went up considerably, so there isn't a lot of motivation for them to put their homes on the market and get a new home that might be expensive and have to pay 6% plus for their interest rate, which is double the amount of interest rate that they have locked in right now. Not a lot of motivation for them to put their homes on the market. Okay, let's kind of go over the summary of what is happening here in the Knoxville market. So some news and where we're at as far as different things that affect the real estate market. Knoxville was ranked among the top 10 metros with the fastest rent growth in the fourth quarter, according to a report from the National Association of Realtors. So that is speaking to our demand here in Knoxville, and why we expect prices to stay steady and not fall. There's a lot of demand, a lot of people coming into the area. If rent is rising fastest among the top 10 metros in the country, that means that there's a lot of demand. There are a lot of people that want to live here. Knoxville was also ranked number 10 among the top U.S. metros for annual job growth in 2022, with total annual employment up 4.9% from the previous year. That's from RealPage Inc. Another reason why people are coming to Knoxville. The job situation here is good. So another reason why home prices will continue to stay up is because there's a demand to come to Knoxville. And if there's a demand to come, there will be a demand for places to live, which will keep home prices high. Knoxville Area Association of Realtors released its 2023 forecast report in December, predicting home sales to decline 10 to 12%. So the amount of homes sold will decline, but they also said home prices would increase 3 to 5% in 2023. So again, prices not going down, prices will continue to go up. So don't wait if you're a buyer for prices to go down, because you'll continue waiting and then prices will increase and you'll end up, if you want to buy a home, having to pay more for one down the road. Here's what you need to know. The collision of high mortgage rates and the reemergence of seasonal trends, like we talked about as far as the winter months, placed downward pressure on housing market activity this fall. But recent data indicates that the market is beginning to recover after reaching a low point, with December marking the first acceleration in year-over-year home price growth in nearly a year. However, with the monthly payment for the median-priced home still approximately 50% higher than a year ago, the market is nevertheless likely to remain sluggish during the first half of the year. And I hope you caught that. The median home price is 50% higher than it was 1 year ago. That's a big thing. Housing inventory declined throughout January, a typical seasonal pattern like we talked about. While down almost 900 listings from a high point in October, active listings remain about 90% higher than this time last year, providing a bit more inventory during one of the slower parts of the year for housing market activity. So if it's a slower time of the year for activity and inventory is up significantly, that is a great opportunity for a buyer to go out now and secure a home and be able to negotiate on it with less competition. That is my recommendation. Don't wait for all the inventory and all the rest of the buyers to come back to the market and compete again. Grab a home now when there are sellers that are looking and motivated to sell and there's more inventory on the market. Okay, KAR, that's the Knoxville Area Association of Realtors, released their fourth quarter market pulse survey, which is where they talk to the agents and see what the agents are saying, because that's boots on the ground. We're the people that are out in the market every day. So this is what the agents are saying. Results from the latest iteration of the Market Pulse survey indicate East Tennessee's housing market remains relatively competitive, despite a measurable slowdown over the second half of 2022. This is the survey of the local real estate agents. The key findings were both buyer and seller traffic declined in the fourth quarter. 68% of agents responded saying that they saw less buyer traffic than usual, while 57% of respondents reported less seller traffic. So definitely the majority of agents saying that there's less buyer and seller traffic over the fourth quarter of 2022. Also reported receiving an average of 2.2 offers on homes sold in the fourth quarter of 2022. That's down from 2.5 offers in the third quarter and 6 offers in the first quarter. So the first quarter of the year, agents were getting 6 offers on homes, on each home on average. That came down to 2.5 offers in the third quarter. And then in the fourth quarter, they were getting an average of 2 offers on the homes they were listing. Industry expectations regarding home prices remain relatively strong. 57% of agents said they expect home prices will either stay the same or increase over the next year. That's up from 56% in the previous quarter. So that jumped up a little bit more. So it's showing that agents are even more optimistic about what is happening in the market with what they're seeing. All cash sales represented 28% of home sales in the fourth quarter. That's up from 26% in the previous quarter. And then here's a big one, especially for sellers to listen to. Out-of-town buyers as a share of all home sales have declined considerably over the past year. Buyers relocating from another area represented 8.5% of all home sales in the fourth quarter. Compared to the first quarter of 2022, when that was 24%. So in the first quarter of the year, 24% of sales were from people that were coming from outside of the area. That's down to 8.5%. We were seeing that big influx of people coming in from California and New York. We were seeing lots of buyers at the beginning of the year coming in. That accounted for 24% of the sales in the first quarter of the year. But now, this past quarter, just 8.5% of the buyers are from relocating in from other parts of the country. All right, mortgage rates are trending down. Mortgage rates tumbled in recent weeks after reaching a high level in nearly 2 decades, the highest level in nearly 2 decades, according to Freddie Mac's primary mortgage market survey. The average 30-year fixed mortgage rate was 6.13% for the week ending January 26th. That's down 95 basis points from early November. Rates actually fell below 6% for a day a week or so ago. They went to 5.99%, but then they vaulted back up a day or so ago and now are back around 6.45% due to a very positive jobs report. So there is a lot of volatility going on as far as mortgage rates go. So it's definitely something that you want to keep an eye on. If you are an active buyer out there, you need to be in constant contact with your loan officer to make sure they lock you in when they see the trend drop down, because it can be all over the place. There's really no knowing where it's going to go, because every time one of these big reports comes out, it can either go up a lot or down a lot. So you just have to talk to your loan officer and who has their finger on the pulse of what's going on in the market. What's next with mortgage rates? Mortgage rates forecast for 2023. The forecasts are all over the board for 2023 as far as mortgage rates, but Federal Reserve Chairman Jerome Powell has consistently indicated that ongoing rate hikes will be necessary, with core inflation in December easing to its lowest pace since October of 2021. Overall inflation remains well above the Fed's 2% target rate. Moreover, with the federal funds rate at the highest level in 15 years, mortgage rates are expected to remain elevated through the first half of 2023 and potentially beyond. So as long as they're still fighting inflation, you can expect mortgage interest rates to kind of stay elevated. But if they have to, they may, if we get into a recession, official one, history shows us that actually mortgage rates fall during a recession. So something to keep your eye on. Again, talk to your loan officer and have them educating you on what is happening with interest rates. Or follow my page. I talk about that as well. The fourth quarter rental market report. Knoxville's rental market continued to outpace the U.S. average in terms of both rental growth and occupancy in the fourth quarter of 2022, a result of elevated migration since the pandemic and underbuilding over the past decade. So Knoxville's rental market is definitely outpacing other parts of the country. Rent growth, effective rents in the Knoxville area were up 14.06% year over year in the fourth quarter, outpacing 6.6% nationally. So over double the amount of rent growth in Knoxville compared to the rest of the nation. On average, effective rents are 48% or $447 higher than pre-pandemic levels. Occupancy, Knoxville's rental occupancy rate remains among the highest in the nation at 97.3%. So if you're an investor, it tells you that having an investment property in the Knoxville area is a good investment. We're happy to help you with that too, if that's something that you're looking to get into. While tailwinds like favorable demographics and strong job growth indicate demand in the Knoxville market will remain robust in the long run, the multifamily sector is facing considerable uncertainty in the short term and could experience a period of softness over the next year. So the rental market is great, especially long term, but I'm going to explain now why there may be some softness in the rental market, especially the apartment rental market over the next year. And this is why. A record number of units are under construction and slated to become available over the next 12 months. If you're living in Knoxville, in West Knoxville, or any part of Knoxville, you know that you're seeing all these apartment buildings spring up out of the ground. Some are under construction, some are finishing construction, some are just starting construction, but we're seeing tons of apartments come out of the ground in the Knoxville area. Well, from the years of 2018 to 2021, the Knoxville area had an average of 825 units under construction and slated to become available during the next 12 months, each quarter. But in the fourth quarter of 2022, it went from 825 units under construction to 2,094 units under construction. So we're going to see an overabundance of available apartments coming into 2023, which may soften the market because there will be, again, we've talked about it all the time, supply and demand. There will be an abundance of supply and less demand, so that will soften the market and hopefully bring rent prices down, especially apartment rents. Periods of high inflation and low consumer confidence tend to have a freezing effect, with renters and homeowners alike more likely to stay put. So current roommates are more likely to stay and renew their lease rather than split up and live on their own. As a result, housing formation is likely to remain suppressed over the next year, thereby reducing rental demand. All things considered, though, the Knoxville rental market is poised to take a step back in 2023, and a period of softness isn't out of the question. But longer-term holders don't have to worry much about it, as the favorable demographic trends and strong job growth indicate demand in the Knoxville market will persist over the long run. Okay, so that is a big summary of things happening in the market here. If you have any questions about any of this, one specific thing or a couple things, or I didn't touch on your specific area of town as far as what's happening in the market there, feel free to reach out, comment below, send me a DM, and I'm happy to pull the data for your specific situation and answer your specific question. I hope you are having a great day and that we can help you in the future. We look forward to talking to you soon. This is Troy Stavros with Doorbell Real Estate. My team and I are always here for you. We'll talk to you soon.